Let's start with the phrase you hear all the time: I got lucky. It's the easiest explanation for financial success and also the most misleading. When someone says, I got rich off Palantir Technologies, it creates a very specific image that they picked a random stock, held it for a while, and somehow walked away with life-changing money. It sounds simple. It sounds repeatable. And that's exactly why it's dangerous, because it hides the real process behind the outcome. What looks like luck on the surface is often the result of understanding something before it becomes obvious. In the case of Palantir, the opportunity wasn't just about price, it was about positioning. You had a company deeply embedded in government infrastructure, a business model built on long-term, high-value contracts, and most importantly, a product that sat at the center of a massive shift toward data-driven decision-making. This wasn't random. It was aligned with a broader trend, the rise of data as a strategic asset. But here's where most people get it wrong. They focus on the result, the stock going up, instead of the reason it went up. They see the outcome and assume the process was simple. And because of that, they try to replicate the outcome without understanding the underlying logic. That's how people end up chasing headlines instead of building wealth. Because real investing isn't about guessing which stock will explode next. It's about recognizing patterns early before they're widely accepted. And pattern recognition requires two things most people avoid: time and effort. It means asking better questions. Why is this company relevant right now? What macro trend is it tied to? Is this a short-term narrative or a long-term structural shift? The investors who benefited weren't just reacting, they were anticipating. They saw how governments and enterprises were becoming increasingly dependent on data. They understood that decision-making was shifting from intuition to algorithms, and they identified a company positioned right at the intersection of that change. That's not luck. That's informed conviction. Now, does luck play a role? Of course. Timing matters. Market sentiment matters. External factors matter. But luck might open the door. It doesn't keep you in the room. Because even if someone stumbled into the opportunity, staying invested requires belief in the thesis. And belief comes from understanding. Without that, most people exit too early or too late. So when you hear, I got rich off Palantir, don't ask what stock they bought. Ask what they saw that others didn't. Because that's the real skill. And if you don't learn to identify those patterns, you'll always be one step behind, watching success stories instead of becoming one. The illusion of lucky wins keeps people passive. It convinces them that wealth is accidental. But in reality, consistent financial success is built on clarity, not chance. If you've ever had a winning investment, even just one, it's tempting to ask, how do I do that again? But that question can trap you. Because the goal isn't to repeat the same trade. It's to understand why it worked and then apply that thinking to what's coming next. Markets don't reward repetition. They reward adaptation. The real game is not picking a stock. It's spotting the wave before everyone else sees it clearly. When people talk about success with Palantir Technologies, they often focus on the company itself. But the bigger picture was the wave behind it, the explosion of data and the growing need to turn that data into decisions. Palantir was just one expression of that trend. And that's the mindset shift most people never make. They look for the next Palantir, instead of asking, what is the next Palantir-like environment? Because once you understand the environment, you stop relying on a single bet. You start seeing multiple opportunities within the same theme. Right now, we're living through another one of those shifts, and arguably, it's even bigger. We're watching the transition from human-led decision-making to machine-assisted, and in some cases, machine-driven intelligence. This isn't just about faster processes. It's about fundamentally changing how businesses operate. Think about it. Companies are no longer just collecting data. They're trying to act on it in real time. They're automating customer service, optimizing supply chains, predicting behavior, and even generating content. That's not incremental improvement. That's transformation. And at the center of this shift is artificial intelligence. But here's where things get interesting. Just like before, the biggest gains won't come from chasing the most talked about names once they're already mainstream. They'll come from identifying the infrastructure behind the trend. The companies building the tools, the platforms enabling scale, the systems that others depend on. Because in every major shift, the enablers often outperform the visible frontrunners. But spotting the wave early requires a different approach. You have to zoom out. Instead of asking what stock is going up, ask what is changing in the world? What behaviors are shifting? What industries are being disrupted? Where is capital flowing and why? These are harder questions. They don't give instant answers, but they give you something far more valuable: context. And context is what allows you to act before something becomes obvious. Because by the time everyone agrees on a trend, it's already priced in. That's why the real edge isn't speed, it's perspective. It's the ability to connect dots early, even when the picture isn't fully clear yet. And yes, that comes with uncertainty. There will be false starts. Some trends won't play out the way you expect, but that's part of the process. Because the alternative, waiting for certainty, usually means missing the opportunity entirely. So the question isn't whether there's another big wave coming. There always is. The question is whether you're training yourself to recognize it or waiting for someone else to point it out after it's already too late. Because in investing, the biggest rewards don't go to those who react. They go to those who see first and act with intention. Here's the uncomfortable truth. Even when a massive opportunity is right in front of people, most will still miss it. Not because they lack access to information, not because they're not smart enough, but because of how they think. We like to believe that success in investing is about intelligence, but more often it's about behavior. Look back at the rise of Palantir Technologies. The information was there. The trend was visible. The company's positioning wasn't hidden, and yet the majority of people either ignored it or dismissed it. Why? Because it didn't feel comfortable. It's easy to invest in something that already looks successful. It's much harder to invest when the story is still forming, when there's uncertainty, skepticism, and incomplete information. That's where most people hesitate. They tell themselves, I'll wait for more clarity. I'll get in after the next dip. I need more proof. But here's the problem. Clarity comes at a cost. By the time something feels obvious, the opportunity is often gone. The early stage of any major trend is always messy. There are conflicting opinions, volatile price movements, and constant doubt. And that uncertainty creates friction. Most people aren't trained to handle that friction. They're trained to avoid it. So instead of acting, they delay. And delay in investing is expensive. Another reason people miss out is because they focus on noise instead of signal. They follow headlines, social media sentiment, short-term price movements. They react to what's happening today instead of understanding what's building over years. And in doing so, they lose sight of the bigger picture. Take the current wave around artificial intelligence. You'll hear everything from, it's overhyped, it's a bubble, it's too late. And maybe some of that is true in the short term. But long-term shifts don't disappear because of short-term volatility. The real question isn't whether there will be pullbacks. There always are. The real question is whether the underlying trend is strengthening. And most people never get that far in their thinking because they're anchored to price. If something goes up quickly, they assume it's too late. If it drops, they assume it's broken. So they end up doing the opposite of what works. They buy when it feels safe and expensive. They sell when it feels uncertain and potentially undervalued. It's a cycle driven by emotion, not logic. And then there's comparison. People see others making money and feel like they're already behind. So instead of making a rational decision, they either rush in too late or opt out completely. Both lead to the same outcome, missed opportunity. The reality is most people don't fail because they lack opportunity. They fail because they lack a framework for acting on it. They don't have a system to filter information, manage risk, and stay consistent. So every decision feels reactive, and reactive investors rarely capture long-term gains. That's why history repeats itself. New trend. Same hesitation, same excuses. And once it's over, the same conclusion. I missed it. Not because it wasn't visible, but because it didn't feel comfortable at the time. And that's the pattern you have to break, because the next big opportunity won't feel obvious. It won't feel safe, and it definitely won't come with unanimous agreement. But that's exactly why it exists. And if you can learn to act despite that discomfort, you position yourself where most people never get, ahead of the curve. At this point, it's easy to feel like investing is about finding the next big thing, the next breakout company, the next exponential return. But that mindset is exactly what keeps most people stuck. Because wealth isn't built on one idea. It's built on a repeatable strategy. Yes, someone might say they got rich from Palantir Technologies. But if you look closely, the real success wasn't the stock. It was the framework behind the decision. And that's what actually matters. Because a single win can change your finances, but a system can change your life. So what does that system look like? It starts with understanding the difference between noise and direction. Markets move every day. Prices fluctuate constantly. But real wealth is built by aligning with long-term direction, not short-term movement. That means stepping back and asking, where is the world going over the next 5 to 10 years? Right now, one of the clearest directions is the expansion of artificial intelligence into every layer of business and daily life. But identifying a trend is just step one. The next step is selecting how you participate. This is where most people either overcomplicate things or oversimplify them. They either try to pick the perfect stock, which is nearly impossible, or they invest blindly without understanding what they own. A better approach sits in the middle. You focus on high-quality companies that are directly benefiting from the trend. Businesses with strong fundamentals, scalable models, and a clear role in the ecosystem. And instead of going all in on one idea, you build exposure. Because trends don't play out in a straight line. There will be volatility, setbacks, and periods of doubt. Diversification within a theme allows you to stay invested without being overly dependent on a single outcome. Then comes the part most people underestimate: time. Wealth doesn't come from being right once. It comes from being right and staying invested long enough for the thesis to play out. And that's harder than it sounds. Because markets will test your conviction. Prices will drop. Narratives will change. There will always be a reason to sell. This is where discipline matters more than intelligence. A strategy only works if you can stick to it. That means setting clear rules. When do you buy? Why do you hold? Under what conditions do you sell? Without that structure, decisions become emotional. And emotional decisions rarely lead to consistent results. Risk management is the final piece. Not avoiding risk, that's impossible. But managing it in a way that keeps you in the game. That could mean position sizing, staggered entry points, or simply not investing money you can't afford to leave untouched. Because the biggest mistake isn't picking the wrong investment. It's being forced out of the right one too early. So when you hear, "This is even bigger," don't interpret it as a call to chase something. Interpret it as a reminder to refine your process. Because opportunities will always exist. The difference is whether you approach them with emotion or with a system. And in the long run, the system wins every time.